Hello there, everyone. This is Mazske Finance along with Millennial Mike. Stay tuned. We are discussing Kiavi.com, Kiavi.com, how they're going to help me do a successful BRRRR strategy and a cashback refinance. Kiavi.com. So stay tuned. All right. Well, hello there, everyone. Hope you're doing well. It's still the same day as it was this morning when I recorded a video, whatever day it is, because every day is Saturday, but it is Monday, February the 21st. And I have my good buddy here with me today, Millennial Mike. And we're going to do a different kind of treat today. Mike's going to ask me some questions. So, Mike, I'll turn the floor over to you.
Well, I appreciate it, Mark. Thanks always for having me on the channel. And, I hope I too get to the point where I don't know what day of the week it is because I'm enjoying retired life and every day is the same, swimming in the pool. So thanks for the humble brag on us. So what we wanted to talk about today, or what I wanted to talk about today, is Mark's two newest houses that he's getting. He is working with a friend of ours to move into a market that's new to him, but pretty close to where we already buy houses. And he's got one that he's closing on. He's already signed all the papers on, and another one that he's closing on in just a few days. And so I wanted to ask him all about it because the strategy he's using and the houses he's looking for is exactly what I'm trying to do. So Mark, being a few steps ahead of us, hopefully he can coach me up. So Mark, why don't you just tell us about this first house, the one that you already signed the papers for? Like, how much did it cost? And what's your strategy and plan for it?
Okay, sure. Well, thanks, Mike. And you mentioned the strategies. I'm actually using two different strategies for these two different houses, but I'll start with the first one. The first one is a house I found with the assistance of our mutual buddy, Dom. And what I'm doing with that one, I made an offer on it, and the purchase price turned out to be, I forget what they said it was at first. Maybe they might have been asking like $75,000 or something. But we agreed on a figure of $70,000. And so I had a lender I'm using, which is called Kiavi, Kiavi. They're on the website, Kiavi.com. And so when I first made the offer, I was like, all right, cool. I'm gonna get a 30-year fixed rate mortgage. Kiavi is like a non-QM lender. So they'll loan it to me. And they said, sure, we'll loan, give you the mortgage. So they got an appraiser to go in there. And when the appraiser walked in, I basically was told that he said he could not give an appraisal for that building because it was missing appliances. It needed a floor, meaning like the floor covering, and windows were boarded up. They had to be unboarded, and a few other little things. Nothing that we didn't know about already. But for the lender standpoint, they wanted it to be in better shape than it was. So the lender then called me and said, hey, we got another option for you. And this option is our bridge loan. They also refer to it as a fix and flip kind of loan. Like in common terms, you and I might say, well, we're doing the BRRRR strategy, so it's a BRRRR loan.
Right.
Okay. All right. So what they initially told me was that I would only have to put 10% down, and then they would fund the rehab. And I was like, well, shoot, if I put 10% down, that's less than the normal 20% down.
Right.
And if I pay the rehab and they reimburse me, it's no money out of pocket. And then when it's all done, I do a cashback refinance and I pull my money back out. So that's the way it was kind of heading. But as the process kept going, I had to submit a scope of work, and our mutual friend Dom helped me out with this. A scope of work of all the work that needed to be done. I had to put prices down, send it to the lender, and the lender would respond, well, you can't do that work for $500. We think it should be $2,000. I was like, okay, whatever you're saying, okay. And we got the final bill up to like maybe $15,000 or so, and the bank guy was like, the underwriter should accept this. He submitted it. Then he called me up and said, they said that budget was too low. They changed some figures. So the final figure is $24,500. And I was like, well, between you and me, it's not going to cost me that much. He's like, that's okay. That's just what we're doing to make the loan work for you. And I was like, well, okay, cool.
Okay, hold on. Let me ask a couple of questions real quick. Sure. Make sure we're on the same page. So your original plan to get a traditional 30-year finance mortgage didn't work because the house needed some repairs. The lender calls you back and says, okay, here's the product that we can use to lend you this money. You're going to put 10% down on that purchase price of $70,000, correct?
Correct.
Okay. And then you deliver to them your list of things that need to be repaired, your scope of work. And you estimated it as about 15,000. And they said back to you, we don't think you can do it for 15. We think you're going to need 24. So then they lend you 24,000 bucks to complete all of your work. Am I right about that?
Kind of, sort of, but not quite. What they're doing at the same time, they said 24,000. They also came up with an ARV value, adjusted or after rehab value, and they came out with a figure. Remember, I'm buying it for 70 grand.
Okay.
Remember, I'm going to put in probably between $10,000 to $12,000 to do the rehab.
Right.
Roughly, it could be a little bit more, but that's just roughly. But they're saying that after ARV should be, from their perspective, $112,000.
Okay.
Okay, and I was like, well, that sounds good.
So they're going to give you an ARV, an after repair value estimate, before you even conduct any of the repairs. Yes. So then what happens if after you've done all the repairs, do they then assess it again to make sure that it actually does value out at that much? Yes.
After it is done, they send an inspector out after all the work is done.
Okay.
Or whenever. I'll explain that in just a bit. I'm going to back up just a little bit, okay? So with the ARV being 112, they said they can only give me a loan of 70% of that figure. And that 70% came out to like 78,000 and something.
Okay.
And I was like, okay, that's more than my purchase price.
Right.
I'm thinking to myself, that's good. And they said, but what we got to do is your rehab budget is 24,500. So we'll subtract that from the 78,000. And it comes out to like 54,000 roughly. That we will loan to buy the house. And I was like, well, that means I'm not putting 10% down. I'm putting whatever it worked out to be, like 16% or 18% down.
Right.
And he said, yes, that's correct. Because if the ARV was like 120, 130, it would have worked out better. But so I'll put down the difference between 54 and 70. So 16,000 plus the closing cost and whatnot.
Right.
So what we'll do, we're actually closing on it tomorrow. I've signed all the documents. The seller has signed the documents. But the actual closing is tomorrow because today is a holiday. Banks are closed. Mm-hmm. So tomorrow I will wire that down payment and the closing cost. I'll wire that. The lender will wire their $54,000. And I will then, sometime tomorrow, I should basically own the house. All right. So the house is bought. We still got the rehab pending.
Right.
The way they'll do it is when I start doing the rehab, it's up to me when I want to ask for my first draw, meaning request money. I could do half the work. I could do a quarter bit of the work, half the work, 3/4, or everything, and then request a draw. And every time you request a draw, they charge a fee of, I think it's $199. So I don't want to request a draw after every project is done. Like after the floor is done, the walls, I'll wait. So I may wait till it's completely rehabbed because our buddy says he thinks it could be rehabbed in about 3 weeks. Okay, so that's pretty quick.
Yeah, that's a good turnaround.
It is. And let's just say it's 4 weeks, hopefully, whatever it turns out to be. But once the rehab is done, I'll contact the lender and say, hey, I spent X number of dollars. If it's less than 24,500, which I sure hope it is,
right,
then they will then send me the money. Whatever I spent, they will send me that money. So it's like, no, I get my money back.
Right.
But meanwhile, my figure I pay tomorrow, part of the closing numbers are prepaid interest. I'm paying kind of like a hard money interest rate on this dollar amount until I refinance it.
Okay.
And that interest rate is like 9.45%. So it's a high.
Right.
So if I make it to April 1st without refinancing it before then, my first payment is something like $671. It's interest only. Okay. But as soon as the work is done and they send the inspector out, then I can, right then and there, I can go ahead and start the refinance with the same lender. And once they do it, it said it should be pretty quick. they'll have to do an appraisal, but everything else should be pretty quick. So hopefully by April, mid-April, by May, I have a 30-year fixed rate mortgage. They'll pay off the hard money loan, and I will have a 30-year fixed rate mortgage. So life will be good.
Sweet. Okay, so you're gonna front the cost to repair the property yourself, but then once you have your final bill for what it actually costs you to get it all fixed, they will repay you up to $24,000 because that's what they assessed you would need to remodel it. So you'll get all your money back, but you'll still have your bridge loan with them, and you'll still have the repair loan with them. But when you do your cash out refinance, all of the money that you're cashing back out to yourself at the new value, you'll pay off both of those loans and hopefully maybe even get paid a little bit of extra, but at least, hopefully break even or cost very little to actually own that house. And then now it'll be on a 30-year fixed rate mortgage. Did I explain that correctly?
Yes. And one thing they're doing when they do the ARV value, how much they can lend me is 70%. But when they do the refinance, it's 75%. Whatever the appraisal comes out at, they'll loan up to 75%. And they said a couple things. One, there's no prepayment penalty. So if I am ready to refinance in 2 weeks or 2 months, I can refinance, no prepayment penalty. Two, I lost my train of thought.
Happens to all of us. So, okay. So if in case we don't get back to that, so this is your strategy to use the lending company Kiavi to use a bridge loan, a short-term loan with some hard money rates. However, they're going to allow you to repair the house, get it repaired, ideally cash out after the refinance and the new appraised value, get all your money back or close to it. Then from there, you're going to put in a tenant. Now, you don't have any current Section 8 tenants, do you, in any of your properties?
I do have Section 8 tenants in Gary. I do already. Yes.
Okay. But you're also planning, because of Dominic, who loves the Section 8 program, has talked about it to us, you're going to plan to put Section 8 tenants in there. Tell us about that a little bit. Why?
Sure, because Section 8 in that area pays pretty good rent. Like one of the issues I have with Section 8 in Northwest Indiana, more specifically in Gary, Section 8 rents in Gary, from what I've seen, are under market value. My property manager, Vicky, has tried to raise rents. Section 8 will come back and say, we're not paying it, we're paying less. Okay. In Chicago, at least in that part of the city, with whatever Dom says the rent should be, Section 8, from what he says, they pay that figure, which is, to me, it's pretty healthy rent.
Mm-hmm. Mm-hmm. Yeah. I've seen the numbers on what Section 8 pays out there as well, and it's better than the 1% rule for those who know what the 1% rule is. So it makes sense why you'd want to do the Section 8. I myself like it because if you have issues with tenants, any of those issues could be, you can go to Section 8 and they will assist you in either an eviction or getting somebody to pay or helping repairs not be needed as much because hopefully the people aren't being so hard on your properties. So I really like Section 8 as well. I just didn't really know where to start with it. So I'm looking to Dom and you for leadership on that one. I don't want to make the video too long. I think this has been a good video to explain this whole first property. Maybe we do a second video and talk about the second property.
Sure, we can do that. And one last thing on this first property is, remember I did mention there's no prepayment penalty. It's also, when they refinance it, if I don't want any cash back, they'll do it immediately. Once they approve the refinance, we can do it. If I want cash back, it's a 4-month seasoning. So it's not like I have to wait a long time. It's 4 months. It's no big deal.
Okay. So then once you've completed all the work and you put a tenant in there, you're getting paid rent each month, but you do have that $600 payment interest only. You would have to pay that for 4 months before you can do the cash out refinance.
Yes, that's correct.
Okay. So holding cost of 4 months, interest only, but that's your only payment at this point. Your rent from the tenant should easily be able to cover that $600. And then once you cash out at that point, now you just have your regular monthly income from the tenant covering your regular mortgage, taxes, insurance, principal, interest, vacancies, maintenance, all that stuff. Okay.
Yep, that's correct. And one thing I'll do when I upload this video, I'll put a link to Kiavi in the description. And if anyone wants to anyone wants to click on that link and use it, it'll help you and it'll help me. And I'll be upfront with this. They will give a referral fee to me, and they will also give a referral fee, not a referral fee, but a whatever they call that,
a use fee. Yeah.
A use fee, right? And what it is, say, Mike, you want to do this. If once you close on the loan, if you click on my link, I would get $500. You would get $350. Right. So
I'll take it.
It's win-win.
Yeah.
Yeah. All right, good enough. Well, if you want, we can wrap this one up and we can do another video to talk about the second house.
Sure. Yeah. Let's do it.
All right. Sounds good. All right. Well, thank you, everyone. Been great talking to Mike, and hopefully you gained something from this video. Mazske Finance, Millennial Mike, we're signing out, but we will be back at you in just a few.